So Cineworld, is it a buy? Is it going bankrupt? We're going to talk about this today. It had a massive drop yesterday. It was down over 50% after a trading update, and I think that got a lot of people interested. Is this a buying opportunity? And I was blown away with the amount of you guys that were on Instagram. By the way, if you want to follow, link is in the description. On Instagram messaging about it. Is it a good opportunity? On the Discord, a few of you guys were interested in it. If you want to join that, link's in the description once again. I'm doing well with these plugs today. And also in the YouTube comments, a lot of you guys were talking about Cineworld and is it an opportunity. So today I will talk about if I think Cineworld is a buy. Now, funny enough, me and Cineworld, we have history. It's like talking about an ex-girlfriend here. Me and Cineworld do have history. If you guys have been following the channel for over 2 years, it's crazy to think we've been doing this YouTube channel for like 6 years now. But yeah, if you follow the YouTube channel in the last kind of 2 years, you would know I was actually a Cineworld shareholder in 2020 for a very brief amount of time. Unfortunately, I did take a loss. I think it was something like 30%, maybe 40% on that position. When I did buy Cineworld, it was a very short hold. I played it as a bit of a high risk play, didn't work out, and yeah, I actually sold it for a loss. It's only one of 2 stocks I've ever sold for a loss. That and the eToro SPAC, which never ended up merging, were the 2 and very high risk, as you can see, stocks that never worked out in the end. Bit of a short history on why that never worked out. There was a few things that happened which caused me to sell very quickly, but I actually didn't mean to sell for a loss. The short story is basically I was going to work on the day and I set off at 7 a.m. Got to work, I can't check my phone until about 10:30ish. So basically when the market opens at 8 o'clock, I'm going to put my order in and Trading212 are going to sell it. Now I put my order in and I totally messed up because I didn't realize the stock was going to drop that much on the day, and I never put a limit order in. So the market opened up at 8 o'clock. Trading212 didn't actually sell my position until like 10, quite a few hours after the market opened, and Trading212 actually then sold my stock like that loss, and it was a massive drop on the day. And if I put a limit order, then that might have solved Trading212 from on the liquidity issues from selling it at that sort of prices. So total mess up from me, something that I massively learned from, relying on just market orders. I should have done a limit order, but hey, you live and you learn, I guess. That's what a part of investing, isn't it? So when I used to own it for a very brief time, I played as a bit of a high risk play. In that time frame, there was a few things that changed. There was 2 big things that affected me when I used to own it. The first thing was streaming. So you might not be aware of this, but there was a few changes a couple of years ago, which basically meant that a lot of movies that came out of the cinema, and there was also the adoptions going straight onto streaming platforms during the 2020 CV situation. A lot more movies going straight onto the streaming platforms, but it also meant that movies that came to the cinema were able to go onto streaming platforms within a couple of weeks. Now, if you remember previously to that, it used to take a good few months for them to come onto streaming platforms or DVD, and that actually meant that people that really wanted to see movies would go to the cinema to go see them. But nowadays, with it only being a few weeks, people think, oh, you know what, rather than paying so much for, popcorn, drinks, I mean, the tickets themselves, you're talking, £5 a ticket, I'll just buy it and stay at home and watch it. And as well as that, streaming platforms also meant it a lot easier to get hold of the legal versions, and people could wait for them rather than actually going to the cinema to watch them. So that one big change really affected the business, in my opinion, and that was one of the big catalysts for me to sell. Also, during the situation through the CV times, the UK government were particularly not very supportive to leisure businesses. They basically told them, you're staying shut forever. And then eventually when they did open up, there was a lot of mask mandates on them, and that basically meant that through 2020 into 2021, from the CV situation, basically a lot of leisure complexes, whether it be bowling, cinema or other leisure activities, they were basically operating for 8 weeks from March 2020. And even in them 8 weeks, it was very limited with distancing rules and everything like that. So then the government didn't really help the situation either, which also played into me moving away from that business. Going back to where we are at present day anyway, that's a bit of my history on it. A lot of people are seeing the drop in Cineworld yesterday after the trading update, which we'll look at in a second. And people looking at this going, okay, there's risk here, but potentially when you look at the reward, it's now priced at bankruptcy. If I take this bet into, and I generally think that this is a major gamble to play this, if it does work out and Cineworld do make it through the other side, the upside is going to be very good from here. And I think that's what a few people are looking at, that risk to reward. And like I said just a few seconds ago, for me, the key word, I think this is a gamble. And in my opinion, would I buy Cineworld? I would not buy Cineworld. I think the risk here right now is very, very high. And I would, like I said, I would call this gambling right now. It's not like a Revolution Beauty, which had a major drop the other day. You look at that one, it's not really burning through the cash that much. It still has growth. It still has a pretty solid balance sheet. This here, you're looking at an industry that, in my opinion, is struggling. You're struggling for growth. You're struggling for profit. The balance sheet is a very ugly place, which we'll look at together in a second. So for me, this is a really risky play, and we'll have a look at them things right now. So you can see here from Tuesday, the big massive drop off down 50%. And if we do zoom out to the 5-year chart, you can see really since 2019, the business was downtreading, and that CV situation hasn't helped. Now, when we look at the recent trading update, there was some worrying things. There was 2 worrying things in here for me, which means this is very high risk. They basically came out and said there has been lower levels of admissions, meaning that obviously they're not achieving the revenue that I was hoping for, and obviously that will probably impact the amount of profit that they're making as well. Now, they did say that this was due to a limited film slate. Now, in my opinion, I look at this and I think there was such a backlog of films and people wanting to go to the cinema. I can name 3 big releases at the moment, which is the new Thor film, there's the new Doctor Strange movie, and as well as that, there's recently, a few weeks ago or months ago potentially, there was a new Maverick, the Top Gun film. Now, I know a lot of people have been waiting to see that Top Gun film. I actually saw it myself. It was absolutely brilliant, by the way. There's 3 major films there. And I could probably name a few more off the top of my head as well. So when I look at the limited films releases, I actually think, is that true? Maybe it's a bit more digging in here, but in my opinion, there's been a few decent kind of releases at the moment. So I'm not sure if I believe that, because like I said, I think that there's been some major films that have come out. And also there was a bit of a statement here. Now, this was very, very clever wording. Didn't fool investors though, as you can see in the share price. But basically they came out that they said that they need to obtain additional liquidity, basically meaning they need to get cash, and they need to get cash from somewhere. If they don't get cash from somewhere, they're basically heading for BK, and that's the worrying thing. And the issue is when you're already loaded up with debt and everyone knows you need capital, that's always an issue, because even if you do get the capital, that capital with the risk that you have is going to be at high interest rates. So even if they do make it through the other side and get that additional capital, it's not going to be in favourable terms as well. So that's a very worrying thing right now. So yeah, there's 2 worrying things that we're not talking about a company that's actually performing that well here. There's a profit warning, and as well as that, when they come out and openly admit that we need liquidity or we're going bankrupt, that's a worrying statement. And when you look at the balance sheet, you can see here, really since the kind of 2017 period, the balance sheet has just been declining for this business. There was a lot of debt taken on through 2018, and through the whole kind of last 2 years, that debt has just increased to where they're sitting now on 5 billion in debt, which is just insane. This is a 100 million market cap company and it's got 5 billion in debt. And then you look at the balance sheet and they're sitting on 354 million in cash. Now, we haven't got the exact numbers what they're burning through here at the moment, but that cash rate burn is quite high. There's a lot of debt overhanging on the business. And if we do look at the analyst forecast, they are actually expecting them to actually move to profitability in 2023, but they're still expecting them to burn through money at the moment right now. And you can see here, they were actually burning through 500 million last year, which is definitely worrying. So the cash burn is very intense. There's very limited cash left on that balance sheet. The debt is very, very high, and they do need capital. And we have a business here that is saying that they're actually performing trading not very well either. So a lot of people are looking at this as the high risk, high reward play. For me, I think this is a major gamble, because when you look at the risk, you're going into an industry that is really struggling at the moment, and the business is openly, you're not buying a business that's actually starting to move in a positive direction, as what you can see here. Even then, like, the debt is 5 billion in debt is a massive amount of debt here. I think there's a lot of factors playing in here where you would not want to be touching this business right now, in my opinion. The risk is way too high, and like I said, a lot of people are looking at this at the reward only, but you've got to look at the risk here. Now, don't get me wrong, I say this now when this is priced in. Without doubt, in the short term, And I've had this before, maybe in a week, 2 weeks, anything can happen in that share price. It might go a little bit crazy. People try and play that risk and it might work out okay. I'm looking at this from a longer term point of view here, and through the longer term point of view, it's okay looking at it and going, okay, there's a 10% that they make it through this situation here, and if they do make it from this situation, don't get me wrong, there's tremendous upside from here because it's priced at bankruptcy, but you've got to look at the risk. What is the risk of them not achieving and getting to that other side? I would say it's a major amount. I would say it's clearly over 50%. I would say it's probably towards 80% that this business doesn't make it in a year's time, which is definitely way too risky for me. So with Cineworld, is it a buy or is it going bankrupt? Unfortunately, I would say this is definitely not a buy. I think this is way too high risk, and unfortunately I would say this is actually more to the side of bankruptcy at the moment. Don't get me wrong, I never want to see business go bankrupt, and I do hope it works out, and if there's any shareholders watching this video, I do generally hope it works out for you. But for me, in my opinion, you would be taking a very high risk here, and I would say the risk to reward is not on your side. If I was to be taking this risk here, I would be looking at something very similar to like a Card Factory situation, which is a stock that I took the risk on with a business that was going bankrupt. And when I took that risk into Card Factory, I saw a business that was doing pretty well. It was moving back to profitability. It was starting to move back in the right direction of growth. The balance sheet wasn't as bad as this. The debt to equity was something like 80%, I believe, at the time. This is really major in debt at 5 billion, which is, I personally wouldn't. It might be a different situation if it had a little bit of debt on the balance sheet, but even then, I think the industry itself isn't a great one to be touching right now. So yeah, in my opinion, I would avoid this one, but that's my opinion, guys, and I hope you enjoyed it. If you could, hit the like button if you're new, subscribe, and I'll see you on the next video.